But I just want to go over what happened today while I was trading. Okay, so let's start with this morning. This morning, when the market opened, I already had five positions in. I had three contracts, three put contracts, two call options, right? The three put contracts that I had, it cost me $150. Those end up expiring worthless, and I'll tell you why in a moment. The two call options that I had, I paid 140 for them, and they were worth about $540 when I closed the position out. And so immediately that brings me to a net profit of 150, right? Because I spent 140, I spent 150 on the 150 on the three puts. Those are worth zero now. I mean, I probably, I don't know, maybe a few bucks I close it out on. I mean, but it's not. You might as well say we're almost worthless, just about. Okay, I can look it up in a second to see the exact price that I closed it for, and then I got two call options. Right, I paid 140. So overnight, I had about $300 invested in the market. The two call options this morning were worth about 540. The three put options, I didn't make any profit on them. I held on to them for a long time because I was thinking that the market was going to retrace and give back some of the gains that it made this morning. But that didn't happen. And so what we have here is we got $300 profit. That's 540 minus 150. $300 profit, 300 from the calls, minus 150 from the puts. 300 minus 150, so that brings us to a net profit of $150, right? And then, so what I do is when I closed out the two calls, right, for 540, I wanted to stay in the game, so immediately I got in. These are my trades for today. I got in for I bought one call for 170 immediately when I closed out the two calls for 540. And at the same time, I bought another put for $100. The market kept riding up, and so I ended up losing $100 on top of everything else. So my net profit for today is $50. Which is it's not a lot of money, and it's because I made some mistakes, but that's okay because I'm expecting to make that up to next week when the market opens. Sometimes it's like that. But anyways, so I invested $300 and made about 50 bucks because I kind of got emotional towards the end. I had a good play overnight, but towards the end, that's where I got in too soon with the put and the call. See, if I wouldn't have got in with the put was unnecessary, and honestly, this call that I have, it expires. All of this right here is done with, right? Because the five contracts that I had, they're all to expire today. So all of this is done with. I'm just giving you the math on that. This is where I am right here. The market is closed currently right now, but I got one call and I got one put. The reason I got the call is because I closed out the other two calls in the money. I didn't know if the market was going to continue to squeeze up. So I said, okay, I'm going to just transfer. Instead of me having these calls that expire today, let me transfer for one call that expires on Monday, because I didn't know if the market was going to continue to squeeze up. And so, I didn't do that based off of a pattern that I seen. I didn't even let a pattern materialize when I did that. I mean, it's a small pattern, but it's not. I like to at least let a pattern materialize on a 15-minute chart before I make the decision to get back in the game like that. And then I bought the put. The put is just an insurance, just in case the market does pull back over the weekend. I can, even if it was a pullback $3, I can make this $80 will be worth $200. So I'll lose the 170. I'll make 200. I'll net profit about $30. And so now I have $250 in the market, not based off of a pattern about to materialize, but just based off of me trying to stay in the game, which is a big no-no. And so I am kind of upset with myself for that, because that's just unnecessary. Because at the end of the day, the options that I trade, they're close to expiration, so I have to make sure that I trade it right. I can't just get in the game when I feel like getting in the game, So that's a part of my lack of discipline, because I have to wait until the pattern forms that I've been showing you guys on the previous videos to get in the game. Because if I don't wait on the patterns to materialize, that means I can get in the game early, and the market will continue to range. And as long as it's in that range and it hasn't gotten to another support level, or broken through another support, or broken through another resistance, I'm losing money on the theta, on the time of the contracts, because they are due to expire on Monday. So yeah, that's something that I'm kind of upset about, because that's that can go either way. So that's my fault on that part. I mean, I can the patterns now in the market, they're not anything. Yeah, it probably wasn't the best idea to get in now. Let's just put it like that. But we never know. We never know. But I like to see something at least on, well, I like to see something at least on the 15-minute chart. A diamond. Right now what I see is not so much of a diamond, but I just see an M. And that's the M, just it going up right here, it went down right here, went up right here, and it's possible that it can come back down. But what I look for a diamond shaped pattern, which we've been looking at through the previous videos. Because even though this can be an M, what helps you to determine the timing of it is when you find those shapes that we've been going over these last few days. Which is really not, I really don't see it there too much. I'm just kind of in the game to be in the game, but we'll see. We'll see how it goes. But anyways, you never really know. You never really know. So either way it goes, by the grace of God, if it was a mistake to get in over the weekend, we'll clean it up. We'll clean it up. But ideally, what I want to do is I want to, find those diamond shapes that I've been going over all week before I get in the market. Ideally, that's what we want to do. And so now, it can actually go either way. I just pray that the market is volatile. I really don't even care too much about going up or going down. I just want a volatile market, because when there's a volatile market, there's plenty of opportunity. I used to just be bullish or bearish, but now I just want the market to be alive, because the thing I love about options is that even though you're trading both sides, when one side gets in the money, you're gonna profit. And that's what happened. I had 3 puts for $150, 3 of them, 3 contracts, $150, and only 2 contracts for $140. But those 2 contracts moved up like $3-4, got in the money, and they almost tripled, or they did triple. So I'm excited about that. They tripled, but the other 3 contracts that I had, originally I thought the market was gonna go down last night. That's why I bought 3 contracts. I bought 3 puts. To begin with, I probably should have did a video But I bought 3 puts and I had 1 call, and the market began to drop. And so when the market began to drop, it looked as if it was forming a W on a smaller chart. So I bought another call, and that's how I ended up with the 2 calls. But originally I had 3 puts and only 1 call. But then by the time the market closed, I had 3 puts and 2 calls. And so each of those calls were worth almost $300. This morning actually surpassed 300. I believe I saw it at 340 a piece in the money at one time, but I got it out at about 540. So I had 3 puts, 2 calls, and I didn't, I was kind of like torn. I didn't really know which way to go. I didn't want to get the calls out too early. That's the only reason I bought this other put option that I lost $100 again on. I bought that because I didn't know if the market was gonna pull back. I wanted to, maybe if the market would have pulled back, then I could have took the put contract out and then bought another call option. But it didn't go that way. I mean, we didn't have no pullback. We didn't have no real pullback today. And I've been on the charts all day, so we just got a pullback at the last minute. And so the put that I bought for $80 is worth about $100. I made about 25% on that. But we just got a pullback at the last minute. But as you can see all day, we didn't have any real pullback ever since, 9:30. Let me look at another chart frame. Yeah, we didn't have a real pullback. See, it gapped up overnight about $1, and then it just kind of stayed flat. And then it peaked up, and I bought a 469 put for Monday, and we had a little pullback. So my 469 put is worth about $100, and I lost a couple dollars on my call. But I'm not crazy about this pattern, and honestly, my skill in recognizing these patterns in the charts that shows when the range has come to an end and it's going to go to a new high, that's still being developed. So honestly, it's possible that it could move over the weekend. It's possible that it could go higher or lower over the weekend. We'll just have to see. But either way it goes, with the strategy that I use, I'm able to adjust. I'm able to adjust. So I believe one of the most areas that you need skill in is in transitioning your options. When you're trading that close to expiration, you got to be able to see at least 4 hours ahead and say, hey, it's not going to happen. And what I do to help me is that I look at the patterns on a chart, but I also go back to the contracts. I also go back to the contracts, and if the contract, like right here, the 469, let's say I got the 469, like when you buy 469, it costs $2. And so if the contract is way out of the money and I don't really see it dropping enough to get to a sustainable profit before the day is out, I would go ahead and just close that contract out and transition it to the contract for the next expiration date. That's what I did with the 2 call options that I had. Actually those 2 call options, I would actually did good just keeping them to the end of the day, because you see that 328, that's $328 for a 468. I had 2 of them. So I lost money by getting out too soon. But I didn't know if the market was going to pull back and it was going to get out of the money. And so to be safe, I just, I got out of those two call options and I got into the one on I got one for Monday. I only got one. I didn't get two for Monday. I just got one for Monday. Because there's really no need for me to get two, because I got that more so to stay in the game. I didn't get it because I saw a pattern developing. See, when I got the two call options yesterday, I got them because it was a good pattern that was developing. I got it at the perfect time. I spent about 70. No, actually, on one of the call options, I don't even think it was $70. I think it was more like 50 something bucks. Let me look at it real quick. So it was just, it was just a perfect. It was this perfect timing. I bought one for 73, and I bought one for $68. So that's what I bought. I bought the no. Well, where it says $68, not 73. I bought one for $68. I bought one for $68, and I bought the other call for 468. Call expires December the 23rd. Okay, I bought one for $68. I don't see the other call in here. Okay, so I bought one call for $68. But then I ended up selling. So I sold two calls today. The other one's like 70 bucks, somewhere in here. But anyways, okay, I sold one call. You see that 468, 1223 for $259. And the other one I sold today for $291. And so both of these calls didn't even cost me 150 bucks. I had about $300 invested total. So let's see what we got here. So, I mean, you got to be able to see if the pattern is not, you got to be able to time whether the pattern is going to materialize before your option expires. And if it looks like you need another day, then you just have to salvage the rest of the value that you have in the option, salvage it and add it to another option for a later day on the 27th. And that's how I do it. And I don't trade options too far out. I like to trade it as close to expiration as possible, because that's where you can make, that's the riskiest, but that's where you're going to make the most amount of money. And yeah, it's risky. It's the riskiest, but when you're only getting a few contracts, it's not like you're investing. I mean, everybody's different, but it's not like I'm investing thousands of dollars. I'm investing hundreds of dollars, and like for example, this option that expired today, 471, right? It cost $34. If it dropped about $10, that same $34 be worth $973. So I mean, when these options are close to expiration, it's risky that you could lose the amount of the contract. But at the same time, it's the most profitable. And so the whole key is to not trade what's something that's unmanageable. Make sure that you're trading amount that's manageable, that you can at least continue to stay in the game until you get a break. And so in this situation here, honestly, thinking about it, for this 250 that's in the game right now, just thinking about it, I probably didn't do. It's probably not a bad idea. I got one call for 170, one put for 250. I didn't really see, any great pattern. So I wasn't that convinced. Normally, I mean, honestly, I probably wouldn't even have bought I'm used to buying, this is more so my game right here is getting three puts for 150 bucks and two calls for 140. Because if you can get a big move on that, those three puts, let's say if the market would have dropped about 10 bucks, that $150 would have been, at least about 1,800 bucks when I did the math yesterday. I would have made 1,800 bucks on those puts if the market would have dropped $10. If it would have dropped hard to where it was earlier last week. And so, I would have lost 140, but I would have made off on those three puts. So I like to really, get multiple puts for a few $100 and just play my hand like that. And then the two calls, the two calls kept riding up. If I would have held those calls to right now, they're worth $328 a piece. So that's like 600 and almost 60 bucks, off of a $140 investment. That's the kind of returns you can get when you're used to buying, close to expiration. Yeah, of course you can risk losing it all, but you can also gain. And I mean, the reason that I lost all the money on the puts is not because it was at zero when the market opened up. I just wanted to give it some time to see if it was going to retrace. That's why I let them expire worthless like that. But I was still able to make a profit because of the calls. But at the end of the day, if you're buying and you're selling in a volatile market, you're going to make money. What really kills this strategy is a flat market, a market that's not doing anything. And so the skill that is required when you're using this strategy is to be able to transition your contracts soon. Like you need to be able to transition them before they expire, because that's how you stay in the game. Like, let's say if the market didn't move and I got about $300 invested on calls and puts. My whole goal would have been, how can I transition? Let me see if I can find some contracts to transition in. If it looks like I need another day, I can transition with some other contracts and without losing the investment. So yeah, that's the whole goal. So now we're back in the game over the weekend, about 250 bucks. And we're just gonna see how that goes. If we lose, if it rallies or if it drops, that's great. But if not, we lose a couple of dollars. Hopefully we can have some pattern that will materialize, and I can just add to the position on Monday. Like I was saying on the video, I look at the market like chess. I don't want to put out the whole investment too soon. I'd rather just put out something to kind of see, it's kind of like you got it, like in chess, you can't just wait for that winning shot. It's inch by inch, everything is a cinch. You make your move, the market makes it move, you make another move. But the opportunity comes in the midst of all the action or the activity. That's when you get an opportunity for a kill. You might get a setup. What I'm hoping for is to get a setup on expiration day when the contracts cost about $5 a piece, $10 a piece, moments before expiration. But my pattern is just beautiful, and I can buy 100 contracts, or I can buy 50 contracts and make $10 and get a $10 hit on it. And turn, and make $5,000-$10,000. But that opportunity doesn't just come out of the blue. You got to remain in the game. You got to remain consistent, and you might catch them slipping like that. I was able to turn $100 overnight into, by the grace of God only, into about almost 800 bucks. So it does happen like that, where you can get a really good deal on these expired contracts. My strategy is pure technical analysis, and I'm watching those, I'm studying those charts all the time. You know, even over the weekend, I'm studying the charts. So I'm just looking to see when is it going to break out of a range. And honestly, right now, I don't even really see that breaking out of a range. You know, so but it's possible that it could. But because I don't really see it, you know, I only have one contract. But honestly, you know, me buying a call for 170 is not really ideally what I want to do. I really don't want to have that much on one contract that's about to expire. You know, the only reason I got it is because, you know, I didn't know if the market was going to continue to just ride up. But normally I wouldn't want to have, you know, that much on a contract that's about to expire. So, you know, we'll see how it goes. You know, on Monday, I'm excited to see where we're at because, you know, I got more tricks in the sleeve. You know, I got more ways that I can maneuver the market. You know, add to the position, or if I need to switch the position, I'll be able to tell from how the patterns on Monday, on how the patterns form. You know, I'm really just looking for a short-term pattern because that can help me to time when to get in the game. And right now, this is just a range. It's not really too much right here, honestly. You know, it's not something that I would really jump on. It's just been ranging ever since what time is that? About ever since this morning, 9:30. You know, it's went up a little bit, but not nothing that I'm looking for. You know, nothing that I'm crazy about. Let's put it like that. I'm not crazy about none of it. So, you know, there's small patterns in here, but I like to see. Let me show you what I'm looking for. When I can see the patterns that's on this 1 minute chart, when I can see this on the 15-minute chart at least, then I know I got something. Because the bigger the chart, the bigger the move is going to be in volatility. The bigger the pattern on a bigger chart is going to be a bigger move for volatility. So yeah, that's what I'm looking for. But anyways, I hope you guys have a happy holidays. You know, I hope that you have a blessed time with your family, and I'm excited to get back and talk to you on Monday about what's going on. God bless you all, and you have a wonderful day in Jesus' name.